Hello everyone and welcome back to our channel where we make money matters simple and your financial goals achievable. Have you ever wondered if there's a magic number that could predict when your money will double? What if I told you such a number exists and it's surprisingly simple to use? Today, we're diving deep into a secret that even Einstein marveled at. Yes, the legendary physicist believed it was more important than his theory of relativity. Intrigued? This secret is known as the Rule of 72. In today's video, we're not only going to unravel how this powerful rule works, but also show you how you can use it to transform your savings into a much larger sum. From someone who wishes upon stars for a bigger bank account to those who meticulously plan every penny, this video has something for everyone. Stay tuned as we break down investment tips, uncover the mysteries of compound interest, and even share a real success story that proves this rule is a game changer. And yes, there's a challenge waiting for you that might just kickstart your journey towards doubling your money. So hit that like button, subscribe if you haven't yet, and let's get started on mastering the Rule of 72, ensuring your financial future is twice as secure and twice as bright. Let's grow our money smartly and see real results. Are you ready to see your savings skyrocket? Let's dive in. Einstein thought the Rule of 72 was even cooler than his ideas about space and time. We first heard about this rule from Luca Pacioli, who's known as the father of bookkeeping. Back in 1494 in his book Summary of Arithmetic, Geometry, Proportions, and Proportionality, he shared how important this rule is. Think about doubling your cash in just a few years. Everyone dreams of that. Ever made a wish on a shooting star to wake up to a windfall in your bank account? Well, I'm here to tell you it can really happen. This isn't a fairy tale. In our video today on Smart Money Tips, I'm going to break down the Rule of 72 for you. So hang tight and get ready to learn. Number 1. The Rule of 72. This rule is super helpful for setting financial goals, understanding economic shifts, planning your financial future, choosing investments, and handling your debts. It figures out how long it will take for your money to double at a steady interest rate. Here's how you do it. Take 72 and divide it by the interest rate you expect. For example, if you expect a 5% interest, divide 72 by 5. That's 14.4 years to double your money. This rule is awesome because it helps you quickly see if you're keeping up with the economic changes. It also helps you check if your money moves are smart. Plus, it can show how quickly your initial money might lose value because of inflation instead of doubling. But keep in mind, the Rule of 72 isn't flawless. It works best for investments that grow with compound interest each year. Also, it's not very accurate for rates lower than 6% or higher than 10%. Don't let these tiny issues stop you from using the Rule of 72. Talk to a money expert who can explain this rule in more detail and help you make the most of it. Number 2. Compound interest. As we mentioned before, the Rule of 72 is all about compound interest. Getting to know both this rule and the wonders of compound interest gives you a strong tool for growing your money. After going over the rule, let's take a closer look at compound interest. The magic of compound interest is that the longer your money stays invested, the more you'll earn. Basically, the interest you earn is added back into your starting money, and this cycle keeps going. It's as simple as putting your money in and watching it grow. If you're wondering how long it'll take to double your current savings, the Rule of 72 comes into play again. Say your interest rate is 6%. You would divide 72 by 6, which means it'll take 12 years for your money to double. With compound interest, choosing a plan with a higher interest rate is smart, because the higher the rate, the faster your money will double. It's wise to talk with a financial advisor, explore the best options for compound interest, and apply the Rule of 72 to see just how quickly you can boost your savings. Number 3. Investments. The Rule of 72 isn't just a cool math trick. It's a crucial tool for checking out your investments. At some point, many of us want to invest, and this rule can show you how long it will take for your money to double. This is especially handy if you're thinking about investing, as the Rule of 72 helps you estimate when you might get a 100% return on your investments. No matter the type of investment, this rule comes in handy as long as you're dealing with compound interest. To understand this rule better, let's look at a few investment examples. Investment number 1, a savings deposit with a 1% annual return. Investment number 2, government bonds with a 5% annual return. Investment number 3, mutual funds with an 8% annual return. Investment number 4, stocks with a 12% annual return. Now, with the rule of 72, try to figure out how long it'll take for each investment to double your money. Put your answers in the comments and share any trends you spot. And if you're finding this video useful, don't forget to hit the like button. Number 4, inflation rate. You might be hearing about inflation on the news, but what is it really? Inflation is how fast the price of goods and services goes up over time. This means things like groceries and household items cost more than they did last year. The rule of 72 can help us see how quickly these prices might double. For example, if inflation is steady at 3%, using the rule, we find that prices will double in about 24 years. But with the current rate of 6.8%, prices would double in just about 10.6 years, meaning costs are rising much faster. By using the rule of 72, you can plan your finances better to stay ahead of inflation, making sure it doesn't reduce your buying power. Number 5, savings. The rule of 72 is super helpful, especially when it comes to figuring out when your savings might double. When you think about saving your money, where do you think of putting it? Keeping it at home is risky and you could lose it. What about the stock market? It has potential for big growth, but it also comes with the risk of losing money. Maybe you consider putting it in a savings account at your local bank. Usually, you might earn about 1% interest there, which isn't much, but it's a safe option. Setting a savings goal and making a budget are both smart moves, but knowing how long it'll take for your savings to double is also important. Here's how you can use the rule of 72 to figure this out. Take the interest rate and divide it into 72. For example, if you save $1,000 at a 1% interest rate annually, dividing 72 by 1% means it would take 72 years to double your money to $2,000. That's a long time to wait for just a $1,000 gain. Thankfully, there are many investment options available that offer at least 4% to 7% interest per year. It's worth sitting down with a financial advisor to look for better opportunities. Let's rethink the previous example with a twist. You invest your $1,000 in an index fund that guarantees a 5% interest rate annually. Using the rule of 72, dividing 72 by 5 gives you about 14.5 years. So instead of waiting 72 years, it will only take about 15 years to double your investment. This example uses 5% just for illustration. Realistic rates can be higher, making your money grow faster. Overall, the rule of 72 is a handy math tool that helps you understand different financial aspects, like how long it'll be for your savings to grow or how much you need to earn to stay ahead of inflation. One big lesson from this rule is patience. Start your journey towards financial freedom today so you won't have to wait as long in the future. To make this more interactive and directly beneficial for you, why not join me in a 72-day money doubling challenge? Here's how it works. Start by setting aside a small amount of money, say $50. Then apply the rule of 72 to find an investment option or savings account that could ideally double this money. Track your progress and share your updates in the comments section or on our social media channels. Let's see who can come closest to doubling their investment, and I'll feature some of your stories in my next video. To give you some inspiration, let me share a story about Sarah, a subscriber who used the rule of 72 to transform her finances. Sarah started with $1,000 in an index fund with a 6% return. By applying the rule of 72, she calculated that her investment would double in about 12 years. Fast forward 12 years, not only did her initial investment double, but she continued to invest more money each year. Today, her initial $1,000 has grown to over $8,000. Sarah's story shows that with patience and a solid understanding of this rule, anyone can improve their financial situation. Remember, the rule of 72 isn't just a theory, it's a practical tool that can provide clarity on your financial growth and help you make smarter investment choices. Whether you're saving for retirement, a new home, or your child's education, understanding this rule can significantly influence your financial planning. Thank you for joining me today. If you found this video helpful, please like, share, and subscribe for more financial advice. Drop a comment below with your thoughts or any questions. Let's take control of our financial futures together. And here's to your investing success. Profitable investing.